What's going on, everyone? My name is D. Anthony with Evolution Traders. Hope you guys are all going to have a fantastic and safe New Year's Eve weekend. But let's get into the charts, right? So again, we're always working, especially here at Evolution Traders. We're always continuing to get better, continuing to go over price action, continuing to work on our craft and our process. What we're going to be looking at here is something a little bit more advanced. Those of you guys who are already in Evolution Traders have seen this chart before. You guys know that I trade this big chart and we get some good levels off of it. And, you know, to be honest, it's probably the staple in my trading, as far as my strategies and picking my entries and exits and, trying to figure out where I'm going to identify risk and, whether or not I want to even be in the trade or not. Now, again, this is not the only way to trade. There's thousands of different ways that you can trade. There's thousands of different chart setups. Some people like a very clean chart with nothing on it. Some people only like maybe one or two indicators. Some people like to draw their own supply and demand zones and their imbalances and this, that, and the other. That's all fine. There's no right or wrong way to trade. This is just the way I trade. Maybe I can open your guys' eyes a little bit, to just different ways, right? Different ways to kind of see the market. Maybe there's a potential, setup or strategy that you guys can kind of, pick off and decipher for your own. Now, again, I go over this a lot more in depth in Evolution Traders. I'm just going to give you guys a little bit of a brief rundown here, but it has to do with using the 1 hour time frame. And when I really start to look at these elevated time frames, the 1 hour, the daily, the 4 hour, it really gives some good levels where if we get confirmation, we can potentially have some fantastic opportunities to make some money. So essentially what we're looking at is individual 1 hour candles. These are all going to be different pivot points, and based on where they stop and or close is going to determine if there's any potential room to take a trade or if there's any potential room where we can kind of get in and make some money. So if we kind of just go back to Friday's price action and we look at exactly what happened, we know we had a little bit of a flush, kind of came down a little bit and bounced towards the end of the day. How I would interpret this market, how I would look at it is, if I'm coming into the morning session on Friday, I'm going to pull up the 1 hour time frame. I'm going to look to see, what is those overnight session highs? Where did we top off at? Where is that sitting at as far as the supply and demand? I can see that I've got a Bollinger Band here. I can see we're trading a little bit under this linear regression here. And then we're kind of just trapped, right? Price action is trapped between a 50 EMA and a 50 SMA. We've got some other supply and demand zones in there. So I don't really see a whole lot of, work that can be done here in that overnight session. Now, if we kind of notice this big red candle, I want to show you guys, this is more so for people who are trading that London session. Maybe you guys are looking for a little bit of a move in the pre-market New York session. But if you notice here, this 50 EMA is kind of sitting right here underneath all of these channels, right? All of these candlesticks on the 1 hour time frame is kind of coming down to the 50, coming down to the 50, coming down to the 50, coming down to the 50. All you're essentially looking for is you're trying to identify where is the best potential spot that you can get in and take a trade with minimal risk to where you can make money if there's potential. Now, I can see here if price action generally, 8-9 times out of 10 trades from demand to demand, demand to demand, supply to supply, supply to supply, then if we do start to confirm the loss of this demand zone, which in this case is going to be the 50 EMA, you can see that the Bollinger Band would be our next demand zone. So if we lose one area of demand, we would assume that we trade down to the next area of demand. Now, again, does this happen every single time? Of course not, because if it did, we would all be billionaire traders because we would just automatically understand where to get in and where to get out. But I've been trading this way using this chart setup for years, almost 7.5, 8 years now. I've been trading for 9. Really took me about 2 years to kind of, find something where made sense to me, I could use on a day in and day out basis and, actually become profitable and have more confidence, because at the end of the day, having confidence in your setups and identifying moves and price action is ultimately how you're going to make more money. Because if you don't have any trust in your process, you're never really going to fully open yourself up to accepting the losses and accepting the wins altogether, because you know you're kind of on the fence, and then sometimes you win, and then when you don't win, you're looking to change your edge, so forth and so forth. Once you find a strategy that works for you, for example, this works for me. I come in every day and I look at the same things over and over and over and over, and I start to identify patterns in the market. And when certain levels get confirmed, when certain things happen in the market, they tend to be more profitable the longer I sit and I identify these moves on a day in and day out basis. So what that means is the more that I see a specific demand zone get broken, in this case, you know, it's a 50 EMA on a 1 hour time frame. The more I see that pattern play out, the more I see those pivots confirm, the more I see it go down, the more I see and take these trades, the more confidence I gain, because I've taken these trades hundreds of times, if not thousands of times, you know, and obviously hundreds have not worked, but hundreds have also worked. So if you're kind of still sticking around and you're understanding a little bit of what I'm saying, is if you notice here in this London session at 4 a.m. Pacific Standard Time, we lose this 50 EMA and it trades down to the Bollinger Band. So if you were to get in on this trade, you would want to get in on the confirmation through these channels, through this 50 EMA, and you would want to take profits into this Bollinger Band. Now you can set your stop loss or your risk in different, you know, areas. If you want to use the 1 hour chart, it would have to be over the, you know, candle that you're entering in. It would have to be over those highs. If that's a little bit too much risk, you need to go to a lower time frame and maybe use like a previous 5-minute candle, or maybe some type of moving average on a 5-minute time frame or a 15-minute time frame to kind of give yourself enough room for that trade to actually work out. Again, you don't want to hold your stop losses too tight, but you don't want your stop losses so large to where, you know, if the trade does fail, you're going to blow yourself up. But let's kind of get into the New York session open here. If you kind of notice here, 6 a.m., we kind of do nothing. We're still trapped, right? As we call it in Evolution Traders, we're pinched. So we're still a little pinched below this 20 and 10-day moving average and this Bollinger Band. Notice how we did have some pre-market action that kind of came down and tested this 100 simple day moving average and this 100 EMA. So if you notice this on this chart here, again, this is a little bit more advanced because it requires a little bit more critical thinking and a little bit more problem solving. But if you notice underneath this 100 EMA and SMA, there's nothing down here. So we like this potential here, because if this bottom confirms, then we would be safe to assume that if we lose this area of demand, we would potentially be trading down to the next area of demand. So that price point was a loss of 16,000 or 17,064, and we would be looking to cover at around 17,017. Now I kind of went over this trade live with one of the members in Evolution Traders when we were trading live. I was talking about the 65s, I was talking about the 55s. If we lose that level, we lose that level, we have some potential. Sure enough, we lost that level and we got some good momentum for like 15-20 minutes after that. And it, you know, turned into a really, really big trade for some people. But so the theory is this: if this candle confirms the loss of this demand zone, which was the previous or one of these preceding 1 hour candles here, it's got potential to move down. So as soon as price action confirms, we can set a stop loss on a 5-minute time frame, either a previous 5-minute candle close or 2 previous 5-minute candle closes before that, or some type of moving average. So I'll give you a little bit of an example. If we're looking to take this trade, okay, it's going to be right here. So notice that 65 level is right here. So I'm going to draw another line here. It's going to get a little bit messy, but you'll notice we lose this area right at 7:30, 7:35 Pacific Standard Time. We can use a couple of things as a stop loss. We can use a previous 5-minute candle close. We can use a 5 SMA. We can use a 10 SMA. We can use a 20 SMA. We can use a 200. It all depends on the level of risk. How many points are you willing to give up? What are you looking to really take as a profit? Again, if you're looking to just play from supply to supply, demand to demand, well, then when we lost this area here, those 65s, the next area of demand on a 5-minute time frame was sitting down here in the 39s, 40s. So that's around 20 to 25 points worth of risk. So maybe we give ourselves, you know, a 15-point stop loss, a 20-point stop loss, a 25-point stop loss, depending on what you're going to give as a stop loss, you could use the 5, 10, or 20-day moving average. Again, that's why I'm saying this strategy requires a little bit more critical thinking. It requires you to be a little bit more on your toes because you have to do math in real time. You have to analyze your risk. You have to quickly read the price action and see where potentially you can take some cash. But again, all in all, it gives you a good indicator where you can get in and where you can use, risk and where you can use those stop losses, because you have every area essentially of supply and demand. So if something starts to fail, it's going to give you multiple reasons to get out of the trade. So if you are still stuck in a trade that's losing, it's no one's fault but yourself, right? There is no wishing or hoping when the trade's clearly going against you. It's breaking through levels of supply here. Let's say, for example, you got short and then it starts to take out the 5 and the 10 and the 20 and the 50 and the 200 and then the linear regression, and you're still in the trade. Well, it gave you multiple opportunities to get out of the trade. So it's no one's fault but yourself that you're losing trades. And again, let's say, for example, this trade didn't continue to go on a nice flush for over an hour. Let's say that it quickly came down here in 10 minutes and then started to bounce. Now, if you didn't take profits into demand and now it's bouncing against you and you didn't take any profits, well, whose fault is it that you didn't take any profits? Is it the market's fault or is it your fault? Because clearly, if you're going to follow this type of system, your area to take profits would be here. Now, you can always double down on your position and on your trade when we lose the next area of support. That next area of support was this linear regression channel 50 demand zone. Notice how we close below it at 740. We get that break below it and then we confirm it at 745. So this was essentially another trade that you could have taken. Again, you can use the 5, 10, 20-day moving average as your stop if price action closes above, or you can use a previous 5-minute candle high as your stop. So this is the way I trade. Again, I know I teach a lot of the 20 SMA strategies. Although I use them, it's part of my arsenal. I'm also looking at this chart on a day in and day out basis because it gives me multiple areas where I can take trades. It gives me multiple setups throughout the day. It gives me multiple stop losses and multiple ways and reasons to kind of manage my risk. Now, again, this system I teach entirely in Evolution Traders, and I trade this live in Evolution Traders. It's a lot more complex, but I want to give you guys a little bit of an overview how you can use these potential channels and pivot points and these supply and demand zones to make money. Again, this is not the end all be all strategy. It's not the only way that you can trade. Whether you want to add these type of indicators on your charts, aka moving averages and Bollinger Bands and all this other stuff, or you want to trade a bear chart, it's completely fine. There's no right or wrong way to trade. Just like there's no right or wrong way to manage risk, as long as you're comfortable with that risk that you're managing. Now, again, I would never tell someone to go out there and trade 10 lots, 15 lots, 20 lots, and give yourself a 20, 30, 40 point stop loss. If we're going to trade a particular trade setup with 20, 25, 30, 35 points worth of risk, then obviously we can't trade that much size. We need to size down, maybe play micro contracts, 1 to 3 micro contracts, open up our stop loss so we can allow the trade to develop. But if you're a little bit more of a scalper where you like to trade that heavy size, you like to get those quick punch momentum moves, then maybe we have a smaller stop loss depending on what the chart is giving us on the technical analysis side. And maybe we're not looking for an all day move or an hour move or a big 30, 40, 50 minute flush. Maybe we're just looking for a quick 2-3 minute flush. So for example, if you were to take, I'll just give you a quick example. If you were to take this setup here through that breakdown of 17,066, and let's say, for example, you traded 5 or 10 mini contracts, are you going to have the guts and the patience and the emotions to allow it to just trade all the way down? No, because obviously that candle's moving up, it's moving down. If you're trading on a prop firm, you don't have that much drawdown. So maybe you just take the quick scalp through the break of 17,066 and you go from 1766 all the way down to around 1759, which is around 6-7 points. On 5-10 mini contracts, you take 5, 6, 7, 8 points. That could be your one and done trade for the day, right? So again, you don't necessarily need to even catch the whole move. All you need to do is identify a good setup, identify some risk, maybe put it over your reason why candle or the 5 SMA, and you get in on the momentum, you scalp it, you get in, you get green, you turn off your computer screens, you come back in and you do it tomorrow. The majority of traders will take that scalp. It'll be a little bit of a winner. They'll continue to watch price action go down and take another trade. And then you'll get caught here where you get stopped out. And then you'll think that the market's going to reverse. So you get long, and then the market proceeds to go back down and you take another big loss. And now you're on tilt because you don't really know what you're doing. You don't really trade the same setups every day. You start losing confidence in your strategy and in your process. So you start deviating from the process. You guys need to remain focused. Your strategy is not going to work every single day due to different market conditions. So sometimes we have to tailor, alter our stop losses, our take profits, and the way we trade our system due to the market cycles. Like for example, the last week and a half leading into Christmas and this following week leading into the New Year's Eve, I had to size up, cut my stop losses and my risk, my stop losses down, and just take scalps. I was taking 4 points, 5 points, 7 points because the ranges weren't that big. Now, when the volume is up and the volatility goes up and the ranges are big again on the NQ, then I size down, meaning I play less contracts, but I widen my stop. And when I widen my stop, now this gives me enough room to let the trade expand and have that volatility, because there is volatility, and it allows that trade to develop, and I'm able to capture 30, 40 points, sometimes 25 points, 55 points, whatever the case may be, right? Because again, every day is different. So just because you have a strategy and a process doesn't mean that it's cookie cutter to where every single day you can set the same, set the same risk, set the same take profit. It's not that simple. Trading is very difficult. And again, I explain a lot of this on the inside of Evolution Traders when I'm doing my live webinar. I try to, reinforce that a lot. But again, just wanted to give you guys a little bit of an insight on how I trade. In 2024, I plan on opening up my playbook and sharing a lot more strategies with you guys, and sharing a lot more, trade recaps and price action breakdowns in real time. That way you guys can get a better feel for the market. You guys can all profit, whether you trade the way I trade or you trade a completely different way. Maybe I see the market the same as you. Sometimes people have come to me and they've come to me with, hey, I'm trading ICT, or I'm using, drawing my own supply and demand zones, or I'm using Fibonacci's. And sometimes they will tell me, I've got resistance here at this level, it's a fair value gap or something. And I'll say, sure, that looks great. I've got a 200 SMA sitting right there, so I see what you're seeing. Or hey, I've got, some support down here on your demand zone, which you're using some other type of system, and I've got some support down here at a linear regression. That makes sense. So again, price action is price action. It doesn't really matter what type of indicator you have on your charts. If you know how to chart correctly, more than likely you're going to have the same levels as someone else. So the more people that you can kind of get with in a community, or whether you're trading with some buddies, or wherever you're trading, the more eyes that are on the screens looking at the same thing, you guys can develop trade plans and trade ideas together. I hope that makes sense. But if you guys enjoyed this video and you want me to continue to expand the education here on YouTube, do me a favor, give me a like, give me a comment, give me a follow. If this video can get 100 likes, I will open up my entire playbook in 2024 on YouTube. If that would be something that would be interesting to you, definitely give it a like. I need 100 likes on this video and I will open up the entire playbook. I'll see all of you guys on the inside of Evolution Traders.